All right, okay. Hello and welcome, everybody. Hi, my name is Darius Anucauskas, and I'm the global market analyst here at Markets.com. So, look, this is a quick video. I just wanted to share with you a piece of information that's coming out on Friday. But before we jump into everything, into the charts, into the data, let's have a quick read through our risk disclaimer. So, yeah, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. So, yeah, what I wanted to talk about, ladies and gentlemen, is that on Friday, the 28th of March, we're getting the PCE numbers from the US. So we'll talk about all that in a moment. Just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. Reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, looking at the economic calendar, yep. So Friday, today I'm recording this one on Thursday, by the way. So Friday, it seems to be quite an interesting day, in my opinion. Look, we're gonna get, first of all, we're gonna get the Tokyo core and headlines CPI figures. That's something to keep an eye on, and of course, there's some other bunch of data. I mean, if you are trading something Japanese yen related or maybe the pound related, for example, here we have the GDP numbers from the UK together with the retail sales numbers. So a lot of stuff happening. Consumer confidence in Europe coming out, but of course, I think that the main traction will be the US core and headline PCE numbers, which are kind of the favored ones, from the by the Fed. So the personal consumption expenditure price index is coming out. So yes, at the moment, the expectation for that one, for the headline figure, to remain the same at 2.5. The core one, let's have a look. What's the expectation? Not the month on month, but the year on year is expected to come out a little bit on the higher side. Now that's going to be quite interesting because again, we saw inflation in the U.S. Kind of stalling a little bit and kind of reversing south. And okay, look, that kind of puts the Fed in that position where they're not gonna do anything with the rate cuts. Well, with the rate cuts in the near future, because as we know, let me just drop the Fed Watch tool here very quickly. So what we know so far, that by the end of this year, they're expecting, yes, to have around 2 to 3 cuts, because this number here, it changes. It will change, and I think that this has been fluctuating for some time. But what I'm looking at here is that the June one, that's what I'm interested in. I'm interested in this number here, the 55% here right now, which is showing for a 25 basis point cut. That has been on the higher side a little bit, but given that during the recent rate announcement and press conference, we saw that the Fed is kind of still in that position where they will go for cuts, but the question is, are they going to go for more than 2 cuts? Now that's, like I said, that's quite important to know. And at this point, given that inflation has the main CPI numbers have shifted a little bit to the downside, so everybody's now going to be watching this PCE number, and if the number comes out a little bit on the lower side, then basically there is a chance that the Fed maybe could stick to more cuts. Maybe we could see maybe we could see 3 cuts. But this is the point where I'm going to contradict myself, what I'm saying right now, because I think that the Fed is worried about the tariffs, because this is what's currently happening, and this is what the market is kind of worried about at this point. So as we know, throughout the month of March, we were seeing tariffs kicking in, or getting announced, but most of them are kicking in the beginning of April. So that could kind of put a little bit of inflationary pressure on the U.S. economy, and we could see some higher inflation numbers. At the moment, I think that yes, we could maybe stick to something lower here, maybe even coming out, let's say on the core, we could come out a little bit on the same as previous, but the headline one, which includes fuel and energy prices, well, that could spike maybe going into next reading. So not this one. This one probably could stay okay, but the next one could jump in, could jump a little bit higher. So at this point, I mean, like I said, we could see just numbers somewhere around here, maybe even on the lower side, to be in line with the CPIs, because like I said, those came out on the higher side. Let me just quickly double check. So the last inflation number was at 2.8. And yep, I mean, it dropped from the previous 3%. So the February figure was at 2.8. So again, like I said, we saw a decline. So, and this is, like I said, this is where I'm heading to, and this is what I'm kind of leaning to a little bit more, that we could see for this reading, we could see a lower number, but then going into April, we could get the March figures, and those could be a little bit maybe on the higher side, because we did saw oil picking up pace, as you know. So throughout at the end of March, here in the second half of March, we started seeing some nice movement here to the upside. However, for the month, the price kind of remained still flat, but again. But some other, but food in general got a little bit more expensive. So that's what I'm saying. So for now, long story short, looking at these numbers here for Friday, I'm kind of leaning a little bit more towards the forecast, maybe even on the lower side. And in that case, if that comes out on the lower side, then I wanted to pick up on the US dollar index here. So at the moment, we're seeing a nice little recovery after kind of bouncing from that area slightly below the 103 zone. We pushed higher. We cleared one of my areas here, and we cleared the 103.75 zone. That's great, wonderful. I'm kind of leaning a little bit more towards a larger correction to the upside, because from the technical perspective, we can see that we have this downside line taken from the high of the 3rd of February, so which could in a way still be a good line to monitor, because again, we could see a drive further north here, but yeah, but then this could like reverse back down. Look, again, this is just a theory. This is just an idea. Let's see if this idea will work out. For me personally, I'm looking at this one from the technical perspective at the moment, because again, if we popped above this 103.75 zone, as long as we stay above this area, I'm still leaning for a larger correction to the upside towards this downside line. That's my short-term view. For me to get comfortable with much higher levels, well, I would need to see a break of that downside line, and I would also need to see a break above all my EMAs here, the 50, the 100, and the 200-day EMAs, shown as the green, blue, and white lines respectively. So that's my plan for the upside, for higher number, for like aiming for higher areas. At the moment, we're not there yet. We're kind of, like I said, I'm still examining the upside, but only short-term upside. If by any chance it starts falling back below this 103.75 territory, I'm leaning a little bit more towards the downside. So yeah, that's, like I said, that's my game plan. Again, at the moment, US dollar seems to be on a slightly higher note than the Japanese yen, because again, although both of these currencies are seen as somewhat of a safe haven, at the moment, I think that the market is kind of shifting towards the idea that, you know what, maybe there could be some positivity in the stock market. We could see maybe a little bit of retracement. Yes, despite all the tariffs and everything, because again, the market did get a little bit of a beating here, and I think we're already seeing this nice little retracement. But looking at Dow picture here, look, we climbed back up. We climbed back above the 200-day EMA. Yes, we have the problem right now with this downside line taken from the high of the 20th of February. We have the problem with the EMAs here. But if we overcome all that, yes, I'm leaning a little bit more towards the upside here. And if we do put the Fibonacci retracement on this chart, you'll see that we already did the 50% retracement. We're currently balancing around the slightly above the 38.2. So if we do start popping above this downside line, in a way, there is a chance of overcoming this 50%, and maybe we could go for a few higher areas here, like the 61.8 initially, and then maybe it's that 70.5. But again, that's the 70.5 is a little bit for later, maybe. But for now, all eyes are on the PCE. If the number comes out on the lower side, maybe we could see this one popping a little bit, more to the upside. Now, that is, of course, if the PCE comes out slightly lower, not too low, but slightly lower, like by maybe 1/10 or 0.2% lower, then I could still kind of, agree with a rally here. If it comes out much low, like not much, like lower than that, then maybe there could be a little bit of an issue, because this could kind of show that actually, you know what, maybe there's not a lot of expansion happening right now, not a lot of growth in the economy, because as we know, inflation, slight inflation is needed in order to show growth. So at this point, like I said, we monitor carefully the numbers here. As I always keep on saying, don't try to predict, wait for the numbers to come out and then maybe do something about it. But for now, just kind of examine that option. So just like I said, stay put, keep your eyes on it, and wait for the number to come out. And then if all the boxes in your strategy are ticked, then you can do something about it. If not, if at least one box is not ticked, honestly, don't really try to, improvise too much here. Right, ladies and gentlemen, I just wanted to share with you this little video, this little take on some of these instruments, which I'm watching very carefully. So, especially I'm keeping an eye on the US dollar here, and yeah, let's see what's going to happen tomorrow with the PCEs. If you like this video, give us a thumbs up. As always, do subscribe if you don't want to miss any of the future videos. Let us know in the comments what you think. If you agree with my analysis or you don't, I would love to share. Would love to kind of explore other opinions. So yeah, let us know. Thank you very much for watching and listening. I really appreciate your time. As always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you next time in my other top news with me, Darius Anucauskas. Bye bye.